How to trade futures on Binance. First off, what are futures? Futures are a synthetic contract based on a price of another asset. You trade the price without actually trading the coin. You're just taking a position on the price, contrary to spot where you're actually buying crypto with cash to then sell it for a profit. In futures, you take a position on a price based on a contract through Binance. Well, what's the difference between future trading and spot? Well, futures gives you the option of leverage and going short, but it comes at a much greater risk because you might get liquidated and lose all of your account. So first off, let's allocate some crypto into our futures wallet. You just click on the wallet here, click on futures, click transfer. Here you're transferring from fiat and spot, but I have it in my fundings account, and here you're sending it to futures USDM. Here you pick which coin you want to transfer, and here you put in the amount. I just clicked on max, and there you go. Now before we go into futures trading, I just want to point out that there's a link in the description to get 10% off on commissions on every trade. Now let's go to the top left, hover over future. Now you have USDM futures and CoinM futures. Now USDM futures is you using USDT or stable coins to engage in future trading. CoinM is you using crypto assets. Most people use USDM because CoinM is more risky because your asset that you are buying with is going up and down in value, and the trade is as well. So let's click on USDM. Now a quick overview of the page. Here you have your trading pairs. You're trading Bitcoin using USDT. You can see here that it says perp. Well, what is perpetual and what is delivery? Well, perpetual is a contract that doesn't have an expiry to it, while on the other hand, delivery has an expiry to it. As you can see, next to each coin you have 240927. 24 is the year, 09 is the month, and 27 is the day. So if you open up a contract using delivery, it will close on this day. That's why most of the people use perpetual, so they can keep it open as much as they like and close it whenever they want. Here is your chart. To the right you have your order book, and here you have your current price, and to the right you do your trading. Now let's go through this one by one. This is your margin mode. Okay, you have cross and isolated. Isolated is when the collateral that you have in your account is used to fund individual trades. So for instance, if you have $100 in your account, you can fund 50 for example Bitcoin position and 50 for XRP position. Those are completely separate. If one of them gets liquidated, you liquidate $50, but the other will not be touched. Cross, however, is where you are using all of the assets in your account to fund all of your positions. So if one loses, you can take equity out of the other, and the other position gets drawn down. This is risky because you can potentially lose everything you have on one trade. Now here you have your leverage. Now first off, leverage is very risky, so if you're a beginner, I do not recommend you use leverage. Leverage is you trading with more money that you have, but with greater risk. Let's say you have $100 you want to trade with. Here is the profit percentage. Underneath it is no leverage profit, and underneath it is your 5x leverage profit. So a 25% profit on no leverage is $25. 75 is 75, 100% is $100 because you're only trading with $100. But if you have a 5x leverage, you enter the trade with $500. So 25% is $125, 50 is $250, and 100 is $500. This is leverage. Now underneath it you have your trading types, limit, market, and you have a drop down here for stop limit, stop market. Now I'm gonna go through these quickly because first off, if you don't know what these are, you shouldn't be trading futures, and if you want a detailed tutorial on them, I'll leave a link in the description below to a previous video that you can go and check out and see what these are in detail. Limit is when you want to buy at a certain price. Market is when you want to buy instantaneously. Stop limit is where you put a stop price, and when the price is triggered, the limit order is triggered. This is the available coins in your futures wallet. Now you might ask, at what price will I get liquidated, or what's my PNL? Well, you have your calculator right here. You can do everything here. You can view your PNL, your target price, liquidation price, max open and open price. These are pretty straightforward: entry price, exit price, and quantity. You just put in your current trade and see the results here on the right. Now here you put in your size, for instance, how much you want to buy, how much you want to open your trade. As you can see here. Now, TPSL is your take profit and stop loss. This is used to cut your losses or to get out of a trade when a certain amount of profit is gained. Okay, so here you put on your take profit. Here you put in your stop loss. Here you buy long and you sell short. And down here you can see your positions, open orders, order history, trading history, transaction history, position history, strategy, and assets. Now I'm gonna show you how you can get in a trade. Now let's do a quick trade here. Let's go short because it's in a downtrend. Let's click on market. I put the leverage at 125 to show you how risky it is. Again, I do not advise you to do this. Let's put our size at 2%. Okay, let's take our profit at 59,900 and our stop loss is at 6,100. Okay, now we sell short. As you can see here, it has just opened up in our positions. You have your stop loss and take profit in your open orders. Now if you can see here, it's moving quite quickly. Now I'm at that 11% profit. It can easily be an 11-13% loss because the market is volatile and you've put an order with a leverage of 125. Be careful when you are trading at a high leverage or even at a lower leverage. Okay, so this is the liquidation price. If the price hits 60,283, I will get liquidated and lose my funds. Okay, now here I can close it at market price or I put a limit price. I want to close it now at a market price. And the order is closed. So this is how you trade futures with 125 leverage, which is not recommended at all. So that's it for futures. See you in the next video.